So today I'm going to be giving a practical lecture on market structure. So when we talk about market structure is the study of market behavior. When we say the study of market behavior, basically how the markets behave. So in an uptrend market, the market moves by creating higher highs and higher lows, higher highs and higher lows, higher highs and higher lows, higher highs and higher lows. While in a bearish market, the market moves by creating lower high, lower low and 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 lower high. So that's how the market moves in a bearish market. While in a bullish market, the market moves by creating higher highs and higher lows, higher highs and higher lows. So this point here are the higher high, while this point here are the higher low. This point here are the higher high, while this point here are the higher low. So I'm coming, let me put a note there on the movement. Okay, another higher high here, another higher high here, another higher high here, and the lower high, another lower high here, another lower high here, another lower high here. Then the opposite movement, which is the lower low and lower high. So this is how the market moves in a bullish market, by creating higher high and higher low, higher high and higher low, higher high and higher low, higher high and higher low. In a bearish market, moves by creating lower low and lower high, 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 lower low and a lower high. So all these points here are structure points. The turning point here are structure points. This turning point here are structure points. This is also another structure point. This is also another structure point. So on the bearish movement, this is structure point. This is a structure point. This is a structure point. And this is a structure point. So this is market structure. The market moves. Those places of higher highs and higher lows and lower low and lower highs, those are structure points. Those are structure points. So basically, this is what market structure means. So there's what we call break of structure. So as the market is moving in this form by creating higher highs and higher lows, higher highs and higher lows, if the trend or the market wants to retrace, the market has to break a structure before turning. The market has to break a structure before turning. So let me give another example. So as the market is moving by creating higher highs and higher lows, higher highs and higher lows, higher highs and higher lows, higher highs and higher lows. So the market will get to a point. How will you know that the market wants to change the trend, or the market wants to change movement? Is by coming here and creating equal high. So when the market creates equal high, is telling you that the market wants to change structure. So by creating that equal highs, then the market will come and break this structure point. This is the last structure in this uptrend. This place is the last structure in this uptrend. So the market will break this last structure, this last lower high that the market created. Sorry, the last higher low that the market created. The market will break the structure and begin to create lower high and lower low, lower high and lower low, lower high and lower low. That means the market has changed. The character of the market has changed. The character of the market has changed. So the first sign you get is by the market creating a equal high. This is a equal high. The market created a equal high. The market creates the last higher low and pushing up to create another higher high, but the market failed. The movement fails. Then the market now creates equal highs. This is equal highs. This high is equal with this equal. This high is equal with this high. rather. So that's the first indication you get that the market wants to turn. So after creating those equal highs, then the market now came to this place and break this structure. This is a structure point. This place here is a structure point. So the market came down and broke this structure. So by breaking this structure, it's telling you that the trend wants to turn. The trend wants to change from uptrend to downtrend, from bullish to bearish. So the market came and break this last structure point, broke the structure point and went back and retested the structure point and beginning to fall by creating lower low and lower highs, lower low and lower highs. So basically, this is what market structure is talking about. So if you use your trend line, you will see that those turning point on those structure point are where you put your, those are where this trend line used to be. That's in the case of uptrend, by drawing a resistance trend line. That's where this trend line used to be. Then the bearish one, the support trend line will be here. You see. So in the case whereby you are buying the market, those are those turning points on those trend line that I showed you. Those are those turning points, those places that you take advantage of the market. When the market comes and turn, then you long the market, you buy the market. So you see, those are those areas. Let me use the long position to give you, let me use the long position to give you an example. So you see, those are the points that you enter the market from. So you see, so when the market is creating these higher highs and higher lows, those are where your support and resistance used to be. So in the opposite market too, the same thing. In the opposite market, which is the bearish movement, the same thing. The same thing. So you see. So how can you be identifying all these movements? By you now marking your level of support and resistance, either by using the trend line or the horizontal line. So in the case whereby you are using horizontal line, those structure points are the place whereby your support and resistance will be. In the case whereby you are using horizontal lines, in the case whereby you are using horizontal lines, those are where your support and resistance used to be. Those are where those structure points are the place your support and resistance used to be. So you see, those places that the market is turning, those are your support and resistance areas. So you see, the market is moving by creating higher highs and higher lows. The higher high and higher lows, higher high and higher lows, those are your support and resistance. Those places the market is turning are your support and resistance area. Support and resistance area. Support and resistance area. So you see, the market gave you an example, a typical indication that the trend wants to turn. So you see, the market came here and created equal high. This equal high is also known as double top. This is what we call a double top candlestick formation, or a double top pattern. It's called a double top. And there are sometimes that the market will not even create a double top. The market will just come like this. The market will just come like this, come like this, come like this, and we not even create a double top. We just come and align with this equal this last lower the last higher low, and the market will just do like this. Then the trend will just turn. So this is the pattern we also call head and shoulder pattern. Head and shoulder pattern. So you see, it's also a area of support and resistance. Those are still the areas. Those turning points are still the areas of support and resistance. So when we talk about chart pattern, this is what we call head and shoulder pattern. Head and shoulder pattern. This is the head. This is the head. And these are the shoulders. The right shoulder and the left shoulder. We have the two shoulders. The right shoulder and the left shoulder. So these are the shoulders. Head and shoulder. And this is also called a double top. So this is a double top chart pattern. This is a double top chart pattern. So in the case of bearish market, the opposite of double top is double bottom in a bearish market. Then the opposite of head and shoulder in a bearish market is inverted head and shoulder. When we say inverted, something that is turned. Something that is turned. So in the case of bearish market, when the market is moving in a bearish form, the market moving in a bearish form, so if it is in a bearish turn, if it is in a bearish form, we call it a double bottom. It's known as double bottom. Double bottom. You can see this is a double bottom. In a bearish market, the opposite of double top is double bottom, and the opposite of head and shoulder is inverted head and shoulder. That's in a bearish market. When market is moving in a bearish form and wants to turn. So in a bearish market is known as inverted head and shoulder. This is the head. This is the right and the left shoulder. So you see, in a bearish market is known as inverted head and shoulder. So when we say inverted, something that is turned. So you see, in a bullish market now is known as head and shoulder. That's in a bullish market that is going up, is known as head and shoulder pattern. So in a bearish market is known as inverted, something. When we say something is inverted, something that is turned. Then in the case of double top and double bottom, in a bullish market is known as double top, while in a bearish market is known as double bottom. So the market came and created double bottom, which is also known as the W pattern. There are different names for it. This same double top and double bottom, you can also call it W pattern. This is W. You can see it forms a W shape. You see a W shape. It forms a W shape. You see. So some people call it double top and double bottom. Some people call it W pattern. You can call it. It has different names. So maybe if you are hearing different, if you be hearing different names about it, this is basically what it means. This structure is what it means. So this is market structure. This is how the market moves. Market moves by creating structure. By creating structure, which is the higher high and higher lows, higher high and higher lows. So this is market structure. So if you come to the chart very well and you pay attention, you will see the structures that the market is forming. You see, these are the structures. Higher high and higher low, higher high and higher low, higher high and higher low. So the market came now and created equal high. You can see the market went back and failed to take out this high. So the market created an equal high. You can see this is the equal high that the market created. So the market changed form and begin to what? Begin to fall. So you can see when the market created this equal high and what? Created equal high and begin to fall. So you can see with the last example that I even gave you the other day, you can see when the market opens and the trend continues, what did you see here? You see the market came and break this structure and broke this resistance. This resistance, this broke this support that has now become a resistance, and the market what? Retested and now it's showing the movement of going down. You can see this was the example I gave you guys on the last class, and you see the market opens and continue with the way I gave you the example. You see, I cannot make this up. You can see this is the movement of the market because I actually know how the market moves, and I gave you the example, and the market opened and continue in that form I showed you. You can see. So when we talk about going to, let me go to my main analysis and show you how the market moves. Okay, I can still use the other analysis I gave on you can see. Okay, I have to load this chart. The chart has to load. Okay, let me just use my main, because if I have to reload it now, since I didn't save this thing, to just disappear. So let me use my main analysis and show you. So you see. So you see, the market came and broke this what? This support that has now become resistance, and the market is going down. So you can see it's the same movement with that one I showed you with the same movement I showed you with the one with this thing, trend lines. You can see it. So you see, I did not make this up. I just actually, because I know what I'm doing in the market, and I analyze the market, and the market is going on the direction of the example I gave to you. You see. So that's how this market moves. This market moves by creating higher highs and higher lows. These higher high and higher lows that the market is creating are what we call market structure. You can see are what we call market structure. Excuse me. You can see are what we call market structure. That's how the market moves, by creating higher highs and higher lows, higher high and higher lows. And when you come to the chart, you pay attention, you can see those movements on the market. You can see those movements on the market. You can see those movements. You can see those movements in the market. You can see them. You can see the movement in the market. You can see them in the market. You can see. So you see. You can see the movement in the market. You can see. I just trace this thing. You can see. You can see the movement on the market. You can see. You see the movement. The structure point that we are talking about. You see the structure point we are talking about. And you see. So this is the head and shoulder that the market created. This is the shoulder, the head, the shoulder, and the market begin to fall. So these are structure points. When we talk about market structure, this is what market structure means. This is what market structure means. Market structure, when the market is moving by creating higher high and higher lows, higher high and higher lows, higher high and higher lows. So those structure points are those places you mark your support and resistance. Those structure points are the place where you mark your support and resistance, because those structure points are the place that the market used to turn. Either the market turn or the market breaks that structure. Either the market turn or it breaks the structure. So you can see the market is going and came and broke this last structure. This was the last lower high. Sorry, the last higher low that the market created, and the market did what? Broke that structure. So the break of the structure is a sign for you to know that the trend now wants to change. The market wants to change direction. The market wants to change direction. So you can see. So when the market broke that structure, the market begins to fall. You can see. This is what we call market structure. This is market structure. This is how the market behaves. This is how the market moves. So how can you identify, or how can you begin to know how this movement is being formed? Is by you now studying the market. Is by you studying the market, analyzing the market, practicing the market, practicing as a new trader, practicing. That's how you begin. For now, catching those movements might be difficult for you, but with time, practice make perfect. With time, when you start practicing, you start seeing those movements. You start seeing those movements in the market. Your eyes will begin to catch that movement. But if you do not practice this chart, you can't understand the movement. If you do not read and practice this chart, you can't understand the movement. So you see, basically, this is how this market moves. And this is what we call market structure. So you can see now the market structure now aligns with everything that I have been telling you, the support and resistance, you see. So it aligns. So you see, those structure points are the place of where you mark your support and resistance. The structure points are the place where you mark your support and resistance. So this is what we call market structure. The market move, that wave that the market is creating, that wave movement that the market is creating. It's higher high and higher lows in an uptrend, lower low and lower highs. Those are market structure. Structure. When we say structure of something, so that's the structure of the market. Those higher and higher lows are the structure of the market. So when the market wants to turn, you get an indication, which is a double top or head and shoulder. Some people call it W pattern. That's the double top. Some people call it W pattern. Some people call it a W pattern. That's in a downtrend, but in an uptrend, it's called an M pattern or double top. An M pattern or double top. An M pattern or double top. So opposite of the W is in the market is the M. in a bullish market, it creates an M pattern when it wants to turn, which is the double top. So those are chart pattern. Those indication that you get that the market wants to turn. Sometimes the market either creates a double top, or sometimes the market creates head and shoulder. So you can see the form that it just creates, that form that the market creates is what. So you just give it a name. You just give it a name to be head and shoulder, because the shape, that shape looks like head and shoulder. You see, it looks like a head and shoulder. That's why it's called head and shoulder pattern. So it's just giving a name, head and shoulder pattern. So these are chart pattern. Those things that those double top and double bottom that the market creates, and head and shoulder pattern and inverted head and shoulder, are chart pattern. It's called chart pattern. It's called chart pattern. Why this movement here is called market structure. So time will come that we'll have to incorporate all these things that I have taught you and use it to make an analysis, to analyze the market. So begin to know all these things now, because on the final stage, when we come to combine all these things and do analysis, that's when you get, I'll have to incorporate everything to you for you to see how the market moves, and how we do our analysis by incorporating all these things that I'm telling you, the support and resistance, and market structure. So time will come that we will get to incorporate all these things on our analysis to make informed trading decision. So this explanation does not get any more simple than this. This explanation does not get any more simple than this. This explanation is as clear as day. This information is as clear as day. It does not get any more simple than this. So just go and study this market, watch this video, and read your manuals and study this market. You understand all what I'm saying. But if you do not read and practice, you will never understand all these things. So with this, we've come to the end of today's class.